Greetings, tax tip lovers, and welcome to this week's top property tax tactics in just 5 minutes. Come, gather around, people, and let me share with you how you might use another government sponsored, HMRC approved structure to legally reclaim some or all of the tax you've already paid on income. Well, with the planning I'm about to take you through, you can run amok, and it's Christmas, so why stop at one? Continuing with the theme of legal and legitimate income tax planning that's available to everyone, by which I mean anyone with advisors sufficiently clued up to know about it, here's the story of Bill, who paid a lot of tax in 2019-20 and who was hit hard by COVID-19 and lockdown. Bill wanted to find a legal way of getting some of that tax back. Bill had researched options, and he told me he'd experienced disappointment similar to when he first realized that Kate Humble's Badger Watch was a nature program and that Screwfix is not a dating site. Having watched a few of my videos, Bill thought we could likely provide a legal and legitimate solution, and frankly, we like to be the difference with things that make us different. Well, if ifs and buts were candies and nuts, my, what a Christmas we'd have. Nothing to hide here, so let's get on with how it works. For those of you who don't already know, we list on our website at Rethink.tax all the tax planning structures we use. They're there for everyone to see. That's clients, prospective clients, and the tax authority, and all of them legislated for. Not all firms do that. Go figure. This one's easy enough. We use the government sponsored, HMRC approved Enterprise Investment Scheme, EIS, which debuted back in 1994 and which is designed to encourage investments in small, unquoted companies carrying on a qualifying trade in the United Kingdom. Later in April 2012, the government launched the Seed Enterprise Investment Scheme, SEIS, to stimulate entrepreneurship and kickstart the economy. Sound familiar? I'm guessing neither of these will be going away anytime soon, and the link to the official government guidance on EIS and SEIS is above, just in case you want to check it out for yourself. And here's the thing. With approved EIS investments, there's 30% income tax relief, and it can also be used for capital gains tax deferral. There's inheritance tax exemption after 2 years if held at death. There's tax-free growth, and loss relief can be useful. Well, Bill liked the idea, and he asked us to focus on tax considerations while he consulted with his financial advisor, who recommended a portfolio of EIS investments. For Bill, the big tax benefit of EIS is 30% income tax relief, which he carried back to the previous tax year, 2019-20. That has to be done by the 5th of April next year, by the way. Which means that Bill did, and you can, reclaim income tax you've already paid, which was particularly helpful to Bill, who'd paid a large amount of tax last year before COVID-19 hit. Now, claiming tax relief is really, really simple. And frankly, Bill could have done it himself, even though he'd already submitted his 2019-20 tax return. All Bill had to do was simply fill out the appropriate boxes on the form that accompanied the EIS certificates, and that acts as an amendment to his 2019-20 tax return without the need to restate his return. By carrying back his tax relief to the previous year, Bill now has the cash flow he needs for his business and to pay for the Christmas he feels he and his family deserves after such a miserable 2020. For those of you who haven't met yet, there are risks and plenty of them, and you need to understand all of those if you consider using this type of planning. Well, that was Bill's story, the choice Bill made, and it's not right for everyone. I'm not saying you should do it, but it might be an option to consider and which you might want to discuss with your usual advisor. And hey, if that conversation doesn't go well, then do get in touch. And here's a thought. Maybe it's time to let the old ways die, because if you do what you always did, you'll get what you always got. And if it is time to take action to sort your property tax planning, then here's how. You can do nothing and stay in the exact same place, and pay a shed load of tax unnecessarily, or you can follow the link above for a free Power Hour review with property tax experts who are ex PwC and ex HMRC, and will make your property tax planning like it was our own. For fellow satirists, check out the link above for another bill, this time oddie flavoured, with the goodies take on Christmas back in 1974, and a clever combination of words and music. Okay, that's it. Keep calm and jingle all the way. Catch you again for breakfast next week. Ta-ra!
Father Christmas, do not touch me. Father Christmas, do not touch me. Father Christmas, do not touch me. As she stood beneath the